Welcome to the Fear and Greed Business Interview. I'm Michael Thompson. One of the most interesting companies in Australia would have to be Nine Entertainment. It's a legacy media company with assets across free-to-air television, radio and print, but it also has a big digital play with the streaming service Stan, broadcast video on demand, digital news outlets, podcasts, and stakes in other businesses like property platform Domain. The company has been in the headlines recently for significant job cuts. Like much of the sector, it is under huge pressure from the digital giants like Meta and Google. Last week, the company announced a slump in its profits to $216.4 million, largely a result of a weak advertising market. CEO Mike Sneesby spoke to Andrew Gagan on AusBiz about the results. AusBiz, of course, is Australia's leading provider of live and on-demand video of the latest news in Australian business, markets, economy and startups. You can sign up at ausbiz.com.au. It is entirely free. This interview, though, is a great chat about the ongoing efforts to take costs out of the Nine business, about the outlook for the free-to-air audience, the ongoing dispute with Meta, and changes to gambling ads.
Mike Sneesby, thanks so much for joining us from Nine here at AusBiz. You've described the past year as a challenging economic and advertising market conditions. Overall, how are you seeing your result?
Yeah, look, as you say, it has been a tough year, particularly in the advertising market. But Nine's earnings, I think, given our diversification of revenues into combination of digital and subscription revenues, has meant that our earnings have been quite resilient, notwithstanding a very tough market. I think also underlying the result that we've seen this year, there's been some really strong positives, particularly again in the growth of our subs businesses and the inflection points that we've been talking about in the commentary today, long-term earnings potential for our publishing business, and the expected revenue inflection point across our total television business. And of course, a lot of work done in financial year 24 on our cost base. As you'll see from the commentary, $65 million of cost out of the business this year, with almost $50 million of that expected to be underlying recurring cost out. So we certainly have had to focus on reshaping the cost base of the business and in some cases reinvesting into the important parts of the business that are going to give us continued growth into the future.
That cost out phase has been underway for a number of years now. Can you see any further potential savings in the business?
Yeah, look, this year we've committed to a further cost out of around $50 million across FY24. So that'll be a total of $100 million of cost out across FY24 and FY25. I think it's really important to note that these aren't cost outs. The cost out that we are taking without the view to the long-term growth in the business. So whilst we are taking cost out within that envelope, you'll see in our result today, we've also invested more into the things that drive the business, like technology and technology development, which we implemented ahead of the Paris Games this year and will continue to focus on into FY25. Content investments, as well as investment in the right products and journalism as we focus on driving the subs profile of our publishing business.
And when you talk about those investments and the costs involved, is that going to come at a further cost, particularly in terms of a headcount? You've already announced a number of job cuts. Are you anticipating more in that regard?
Look, we think we've got the cost base set right. As I said, there's more costs that are coming out in FY25, but a lot of the work behind that has already been completed, and that will flow through obviously into our FY25 numbers. We're keeping a very close eye on the advertising market. In our commentary today, we spoke about the expectation of more positive market momentum into the second half of the financial year, but of course we'll be tracking that very closely as we travel through the first half of the year.
Mike, when do you see an end to the structural decline that's taking place in media at the moment, in particular television?
Well, I think two really important points again to reiterate out of our results today. We gave guidance that we expect to see total television revenue slightly up over the full year, notwithstanding Olympics revenue being on top of that. So that is a combination of our free-to-air revenue, which is the part of the revenue that's structurally declining, with the growth of our BVOD revenue, which is driven by the same live and linear content that we see on free-to-air television. So you really have to look at television today in the combination of both of those revenue streams, because they are a single business with a singular cost base and two different revenue streams. So we believe that through the cycle, we've reached an inflection point on revenue for our broadcast linear business, which is a really positive sign. And in addition to that, the commentary today around our publishing business, we've spoken previously about the fact that the publishing business has obviously got inflationary pressures over the long term in terms of cost of staff, cost of paper and distribution for our print newspapers. We now believe that we have the opportunity, particularly with the success we've had in growing our subscription revenue, there's an opportunity for us to grow earnings over the long term in that business. So we believe two of our most substantial businesses have reached some really important inflection points and give us the opportunity to think about the long-term structure of our business. Today, we spoke quite a bit about our integrated audience platform strategy, and that's really how we bring audiences together across our digital platforms, provide the advertising and commercial opportunities to our partners, and maximise returns right across our platforms. And we've had really good progress with that strategy this year.
So we're seeing, across the board, not just your company, but media organisations in general, free-to-air broadcast television audiences are continuing to decline. How's your streaming business in comparison? Is that where your strength lies in the future?
Yeah, absolutely. I mean, it's what I should point out, though, this year is we've seen a stabilisation in the audience declines in free-to-air broadcast. So within our results today, what you'll see is that our main channel actually grew year on year for the first time in a long time, indicating a level of stabilisation of the audiences on antenna-connected television, whilst we also saw very strong growth on 9Now and our streaming proposition. So that's where the combination of a stabilising audience on free-to-air with continued strong growth in BVOD gives us a overall audience growth, which we expect to play through into our advertising numbers in FY25.
And Mike, how would you describe the strength in your marketplaces businesses, particularly Domain and Drive?
Yeah, look, Domain, as you saw in the commentary today, we've never had greater conviction around the opportunity to create value by having the strength of a media company like Nine with our audiences and increasingly digital audiences being delivered into a marketplace business like Domain. And coming back the other way, the scale of the audiences and data that are gathered in the Domain business coming back into our integrated audience platform and delivering value in that way. So certainly the business model is very strong. We feel very confident about our ability to drive value in both directions. You point out Drive. We haven't broken out Drive previously in terms of financial numbers, but you'll note in this year's result we have for the first time. And the reason for that is because, like Domain, we see a very strong opportunity to continue to grow both revenue and earnings in that Drive business. So we want to start to give the market some visibility of that growth and earnings profile, because quite clearly those kinds of digital marketplace earnings should be considered a really strong driver for Nine's long-term financial performance.
We should also touch on your audio business, metro linear radio advertising market slowing as well. Where are you seeing the strength in the future there?
Again, it's all about the transition into streaming. You'll see extremely strong growth in our radio streaming business. Of course, the broadcast business itself continued to deliver really strong audience results. So we certainly deliver a number one position in the Sydney and the Melbourne markets. But it is the growth of streaming and our digital products. So streaming live broadcast radio combined with our podcasting business that is seeing the greatest growth. Again, it's off a smaller base, but we've seen this occur in publishing as we've transitioned to digital, in television as we've transitioned into streaming, and we're seeing the early stages of the same transition in our radio business.
Mike, you're also facing some regulatory headwinds, in particular in gambling advertising. Obviously, that's under debate at the moment. What would you like to see happen in that space?
Yeah, look, gambling advertising, it's a complex subject. So I think it's first really important to acknowledge that there is a social challenge and social issue that the government is looking to solve, and Nine is extremely supportive of the need to ensure that we're looking after the interests of the Australian public in whatever changes to regulation that we make. But I think it's also very important to balance the potential to block gambling advertising with the implications and the flow through that can have on grassroots sports and on major sports in Australia, which are obviously a really important part of our cultural landscape. So we do have to be careful about the way that we implement these kinds of regulations. And of course, if there is a regulation that applies to our broadcast services, which are heavily regulated services, the same kind of regulation needs to apply to digital platforms and digital advertisers who aren't typically regulated in the same kind of way. So it's a complicated topic, and certainly we're engaged very closely with the government to get the right outcomes, firstly for the Australian population, but also the right outcomes for business and for sporting bodies.
And Mike, just finally, you've mentioned that dominance of global tech companies and the increasing threat they pose to these business models locally, in particular in regards to the news media bargaining code. What do you want to see on that front, in particular action from the government?
Yeah, well, look, I should first reiterate that the dominance and influence of these big tech global platforms is not just something that's impacting the media landscape. It's impacting the Australian population. It's also impacting a number of different industries, and I speak to a lot of other chief executives around the impact of that dominance and influence in their respective industries, and the theme is very similar. In relation to media, as you say, we have the News Media Bargaining Code in place, and we continue to encourage the government to use that code to its full extent in order to ensure there's a level playing field for local media companies amongst big tech platforms in Australia. But we also encourage them to go further and look at further regulation to ensure that we are getting ahead of the curve and we don't have areas where we can have big tech finding their way through existing regulation. So we'd encourage the government to look at additional measures beyond that of the News Media Bargaining Code, and measures that begin to address some of the future challenges, including things like artificial intelligence.
That was Nine CEO Mike Sneesby speaking to Andrew Gagan from AusBiz. Sign up at ausbiz.com.au. It's free. This is the Fear and Greed Business Interview. Join us every morning for the full episode of Fear and Greed, daily business news for people who make their own decisions. I'm Michael Thompson. Enjoy your day.